those are the sort of industries I get
Hmm.
really excited about. I want them to be essential. I want them to be operationally complex, critical to society, big markets. And that's where I get excited. So the big five for me are really healthcare, manufacturing, logistics, supply chain, and construction.
Okay, interesting. Yeah, no, it makes sense. Like these industries are something that you're always gonna need. Like
Yeah,
AI can contribute to their success, but AI will never take them over. I'm
yeah.
I'm
It's
I'm
like you have
guessing.
to have a physical element to these industries. So um yeah, like construction, it's like we need physical, pieces to come together. So there will always be that operational complexity. And even though I invest in software only, there's a lot of software that can help those processes be more efficient, and help us better manage, some of the built world operations.
Dishonesty, disrespectful, discrimination, detached, dismissive. That's it. I'm done. Relationships can be messy. Are you having trouble with your personal or professional relationship? Not to worry. As a relationship therapist and coach for over 25 years, I have a lot to share. And so will my guest experts. Let's get smarter in our business and personal lives so we can be our best selves. Now, let's get on with the show. Hello, and welcome to episode 13 of Mixing Business with Pleasure. So, today I had the pleasure of interviewing Amber Illig. She is a general partner in a fund. It's called the Council Fund. And Amber explains to us her journey from being, her first career as an engineer into being a general partner of a fund and how she got into investing, angel investing, and how you can also become an savvy angel investor yourself. I think a lot of women don't even see themselves in this sort of capacity. Often, I think many women, at least of my generation, sort of handed off the managing of any money or funds in the family to their spouses. And I mean, I don't want to make a huge generalization like that, but I think I'm quite, after counseling many, many women and many, many couples, that tends to be more of the norm. So I wanted to have Amber on and other women like Amber just to show you that, you know what, I always say you can have your cake and eat it too. You can be very passionate about your work and also, be a very responsible mother or, have a wonderful personal life outside your work as well. It, it's not neither or, nothing's absolute like that in life. It's always on, a spectrum. It's always requires a lot of harmonization, a lot of communication. And I think both partners can be very passionate about their work and have a great family. So, I mean, it takes a lot of trial and error, as you know, but we talk a lot about trust in this episode. We talk a lot about perseverance, perseverance, resiliency, when to notice that you're doing too much and when to pull back. And yeah, I mean, I think it's important that you take more notice about, how to manage um, your wealth and how to grow your wealth and to know that you can do it too if you're a woman. And if you're a man, then you also may not have any clue about angel investing. So sit back, enjoy, and I hope you learned something today. Okay, thanks for watching. Welcome back, everyone, to the podcast, Mixing Business with Pleasure. Today I have the opportunity to interview Amber Illig. And Amber, I'm pronouncing your last name correct?
Yes, that's it. You
Okay,
got it.
perfect. Usually try to do that before I press record, but that's okay. And yeah, you know, I like to get an eclectic mix of people on this podcast, people that I feel are doing really great things with their career, and Amber is one of them. Now, Amber, maybe if you could start off by just explaining what is it exactly that you do?
Yeah, absolutely. So I'm a general partner at a venture fund called the Council Fund. And what that means is my 9 to 5 is finding the best companies to invest in at really early stages and building a portfolio of those for LPs who have invested in me. So my kind of day to day includes, fundraising if I have an upcoming fund happening. But the bulk of it is really deploying capital and finding the best companies. And then once we invest in those companies, supporting those founders and making sure that they're as successful as possible as far as we can help. And then in addition to that, I also run an angel investing community called the Council Angels. Um, and they co-invest alongside the council fund. And that group came together before I was even full-time in venture. Just a lot of women working at different tech companies, and now we have different industries represented as well. But we all kind of came together wanting to angel invest and not feeling like any one of us had enough deal flow on our own to be doing it. And we wanted to make sure that we knew how to due diligence deals appropriately. And so we kind of pooled our heads together and our networks together. And that took off into the Council Angels, which is what we have today running alongside the fund. And so it's just a really cool community of now 170 awesome female leaders in tech, in healthcare, and in a few other select industries that our fund intersects with as well.
Okay, I'm going to ask you a little bit more about the type of companies you that's in the council fund and what's your passion behind those companies. But first, maybe just define angel investing for those who have never heard of what angel investing is.
Yes, it's a great question. So basically, you're investing in a company before it's on the public market. So this is many, many years before there's an IPO. You're actually finding this company. Usually, you know the founder directly, and you're making an individual decision to invest in that company. And the hope is that either that company someday will get acquired by a bigger company, or it will go through an IPO, or it will become notable enough that someone else wants to buy your stake in that company years later once it's really bloomed in terms of its revenue and traction.
Okay,
And so
great. Now, go ahead.
well, I would say you hear about it mostly in the context of tech companies because there's kind of a proven path for that where you get early angel investors on board and then you raise a seed round, then you raise a Series A, eventually go through growth stage, and then finally you have an IPO. So there's all this different craft around angel investing really early on and then coming in as a VC at later stages. But you can angel invest in things outside of tech as well. It's just a different path to having a liquidity event someday.
Okay, okay. So, and you grew, I know you're in San Francisco now, correct?
Yes.
Yeah.
Yep.
Were you born in San Francisco?
I was not. So I was actually born in Ohio and lived there until I was about 10 and then moved to Indiana for my dad's job. He owned a small business and was just getting it started. Started as an artist, became a small business owner, and that really moved us to Indiana. And then I spent most of my life there, all the way through college and then my first job at Eli Lilly. And then I moved out to the Bay Area for a job with Apple, continuing to do similar work to what I was doing at Eli Lilly, but moving from the pharma industry to the tech industry. So quite the switch both in terms of geography and industry.
Yeah, no kidding. From Iowa to San Francisco must be quite a
Indiana,
difference. Yeah,
yeah.
yeah. Um, so then like I was thinking if you were born in San Francisco, in and around Silicon Valley, like the whole idea of investing in startups would have been like, a very familiar um vernacular, used right in and around you, but that wasn't your case. Like that's
No, it
no.
yeah, it wasn't even on my radar, which is interesting because I went to Purdue, which is a really big engineering school, but they really pushed like aerospace engineering, mechanical engineering, chemical engineering. We did some software engineering, but I ended up studying mechanical and never did I really hear much about Silicon Valley at all. I knew it existed, but I honestly didn't really know much about what it was or how it operated. And then just being recruited out to work for Apple moved me here. And then I started to hear all these conversations happening around me, and it kind of ignited that spark in me from having a father who had owned his own business for 15 years as I was growing up. was like, oh, there are entrepreneurs out here. I forgot how much I love entrepreneurship. I'd like to get closer to that,
Mm.
please. So, and then that was when I really realized, the path that startups go on and venture capital as an industry and how venture capitalists can help those companies get off the ground by investing at various stages. And then ultimately, angel investing for me was a path into that because it's a way to build a track record.
Right. Okay. And you mentioned you were a general partner with a venture
Yes.
capital like firm. So what does that actually mean? What does a general partner mean?
Yeah, so it's kind of a legal term that gets thrown around in different respects. So basically, with a venture fund, it is like fundamentally as an entity, it's a limited partnership, which means a lot of people come into this fund and put money into it because they want to see these companies be successful. But there is one person or one group of people called the general partnership, and they actually have decision-making rights. So they get to decide. Basically, they pitch to all these LPs why you should come and invest in this fund, and then they actually get to go and execute on that vision with the dollars of the LPs as well as their own. And so sometimes you'll see a general partnership that has three general partners in it in terms of the individuals, but ours just has one. So I'm the only general partner at our firm. Have some long-term plans to bring other partners on, but it's a long process because you have to work really closely with people. It's almost like a marriage. So yeah,
Well, I'm gonna ask you a little bit about trust later. So like I think that plays into what you're talking about here. Big
totally.
time. Yeah. I mean, so when you were 16, you would have never thought you'd be doing what you're
No,
doing right now. Not a
never. I didn't even know what it was. Yeah.
no, no, no. And engineering. So you're an engineer. I didn't know that.
Yes. Yeah, by
Okay.
trade. So, yeah.
Okay. Did you spend any time in that industry?
Yeah, I did. So while I was in college, I did this co-op program. So that means that I spent 5 semesters, basically moved home during those semesters and worked for Delta Faucet as a product engineer. And so
Mm.
ended up getting like 2.5 years under my belt or something while I was in college. It did extend the time it took me to graduate, but it was totally worth it. I basically was pulling together bills of materials, helping with design changes for faucets, testing them in labs, getting to do a lot of exciting mechanical engineering work. But what I realized was I wasn't as passionate about individual work as I was about cross-functional work and getting to interface with lots of different people. Like I remember as an intern, the marketing team, I was like their favorite person to work on for various initiatives because I loved getting to see their world as well as the engineering world. Whereas a lot of my colleagues were like, I do not want to get involved with that. So that was an early indication that I might not want to be in a full-time engineering role. And then my first role after college was at Eli Lilly as a process engineer. And so I was helping to get a struggling medical device back on the market because it had had supply chain instability problems. And so my job was work together again cross-functionally with a lot of different types of engineers to basically implement design changes, implement supply chain changes, implement equipment changes to really stabilize this device's supply chain and manufacturing process. And I loved that job. But again, it like really nailed, it nailed it for me that like I like working with a lot of different people. And so I continued to go down this like sort of cross-functional route versus focusing on like individual engineering work, which I think a lot of my engineering friends truly love. Like they don't really want to have to deal with a lot of the bureaucracy sometimes that goes into getting things done. So
Right.
yeah, and I can get annoyed with that too, but I tend to enjoy, parts of the team building stuff. So
For
yeah,
sure. For sure. More of the human experience rather
yeah.
than just machinery. Yeah. Um, w- you mentioned your dad was an entrepreneur. So you definitely had that in you, this whole like startup, love of startup businesses and investing in these businesses and stuff. What would you recommend to somebody and let's say in pursuing their first degree, like pre-graduate work or something like that, and if they're thinking, you know what, as soon as I'm done this degree, I'm going to go right into like I got that entrepreneurial bug. I want to start up my own business. Would you recommend that as being a wise move, or do you think that they should work for some sort of corporate, like to be in corporate for a while first? What's your thoughts?
That is such a good question, Luella. I think in my industry particularly, there's a lot of glorification of like, recent college grad founders college dropout founders. Mark Zuckerberg, I believe, did not finish college before he founded Facebook. So there's a lot of glorification of like, wow, this is, one of the most amazing entrepreneurs in the world, and he didn't finish college.
Yeah.
And a lot of VCs really go after that. They get really excited about young talent. And I think, young people do have a lot of perspective because they're coming straight out of college and they're seeing like this whole new landscape that we're in it. So we don't really see it like from a forest level.
Hmm.
And so they do have great perspective, but I kind of have a different take on this. So with the council fund, I like to invest in what I call proven operators. And these are people that have actually spent years in industry working for corporations, cutting their teeth. Ideally, it's people that have been at corporations through big growth phases. So maybe you joined really early and then, 5 years later, the company looks totally different and you've had to live and work through all those stages and make an impact in an environment like that. That tells me you're ready to be a founder and you understand a lot of the different pieces that are going to have to come together to grow your own company. So I have a little bit of a contrarian view on that. I like to invest in people that are a little bit more experienced. It doesn't mean that young people cannot be successful, but I think forming a company is a very challenging thing, not just intellectually, but also mentally and emotionally. You're out there on an island. And I think it can be hard for young people to navigate that when, they're just coming out of a college experience or a high school experience and, learning how to live in the adult world. And at the same time, like launching a company, it's a lot to tackle. Even for someone like me who worked for 10 plus years in industry before going full time and launching my own business, it's still tough. So
Yeah.
and I think you can really gain a lot of superpowers by spending some time to learn, something about an industry, and you might actually end up with an idea that someone without that experience never would have thought of, and it's actually more defensible. So, yeah.
Right. Yeah. Okay. So, okay, a typical day then for yourself being the solo, general partner with a fund like this. So essentially, like, is you created this fund, right? Like you,
Mhm.
yeah. And um, how how were you able to pick which? And when we're saying fund, so it's not just one company. It's how many companies did you choose to create the fund? And you're still possibly adding more companies to this fund. Is that correct?
I just wrapped up our initial checks from this fund. So the goal was to invest in at least 30 companies, and now we've invested in 30 companies with this fund. So
Okay.
super excited. Yeah.
Yeah.
Um, but
Nice.
yeah,
That
yeah,
is sorry,
basically,
sorry from
go ahead.
the time it started till now, how long was that? How long did it take?
That took 3 years. So,
Wow.
yeah, basically, I invest in roughly 10 companies per year. And that's a similar speed to what I did as an angel investor. It's just bigger check sizes now because it's not only my personal capital.
Right.
So, yeah, now at this point, I've been in it for almost 6 years. So,
Wow. Okay. Okay. So yeah, so let's speak a little bit about the type of companies that, you sort of felt drawn towards investing in.
yeah, so I like to think a lot about, the area that they're building for. So throughout my career, I basically started at Fortune 500 companies like Eli Lilly and Apple, worked my way all the way down to seed stage. So spent some time at Snap pre-IPO and stayed through post-IPO. Then was at Cruise, a transportation, basically doing self-driving cars. And then at Atmos, which was a construction tech company. So in all these experiences, despite working at cutting edge tech companies, on the back end, I was interfacing with legacy industries like manufacturing, supply chain, construction, transportation,
Mm.
logistics. And I realized the tools I had to do my job at these fancy companies were fairly easy and optimized. But then as soon as I would start working with one of our partners on the back end, everything was in spreadsheets, phone calls, and emails. There's a lot of room for human error. There were millions of dollars on the line with these projects we're working on. And I just realized they haven't been getting the same level of attention from the VC industry
Mm.
or the tech talent industry, frankly. It's everybody knows about Airbnb, so everybody wants to go join Airbnb, but does everybody know about this awesome SaaS company for freight forwarders and shippers?
Mm.
Probably not. So
Mhm.
so that's where I got excited and saw kind of some white space where I just don't see enough funding flowing that direction. And I see huge opportunities. I see, you know, hundreds of billions of dollar industries and sometimes $1 trillion industries in this space that can be served. But again, that's one of the reasons I look for proven operators to run those companies because I don't think that someone for example, if you're building like ag tech, like building
Hmm.
tech for the agriculture industry and you have no background in agriculture, it's probably not going to go
Yeah.
well, or there's probably somebody that knows how to do it better than you or has found a better pain point with their customers. So those are the sort of industries I get
Hmm.
really excited about. I want them to be essential. I want them to be operationally complex, critical to society, big markets. And that's where I get excited. So the big five for me are really healthcare, manufacturing, logistics, supply chain, and construction.
Okay, interesting. Yeah, no, it makes sense. Like these industries are something that you're always going to need. Like
Yeah,
AI can contribute to their success, but AI will never take them over. I'm
yeah.
I'm
It's
I'm
like you have
guessing.
to have a physical element to these industries. So um yeah, like construction, it's like we need physical, pieces
Mm.
to come together. So there will always be that operational complexity. And even though I invest in software only, there's a lot of software that can help those processes be more efficient, and help us better manage, some of the built world operations.
Hmm. So, which I mean, I know it's. I mean, you have 30 companies. It's hard to say like which ones you're most excited about, but do you want to just name a few of your favorite and why?
Yes. Yeah, absolutely. So one that I'm really excited about right now is called Dirac, Dirac. They are helping manufacturers convert 3D CAD drawings into 2D work instructions. So right now, if I'm a mechanical engineer and I'm designing a part or an assembly that needs to come together on the assembly line, I spend, hours creating that in my CAD software. And then I actually have to pass it to my colleague, a manufacturing engineer, who's then going to sit with it for days or weeks and write out each work instruction step. And that's not super exciting work for them to do. They would rather be focused on optimizing, equipment and assembly stations and things like that. And so this just took that whole process and made it like instantaneous, basically. So that company is really cool, doing really well, lots of traction with customers. Another company that's really exciting is called Resilient Health.
Mm.
So they are a healthcare company based out of St. Louis, Missouri, and I like to think of them as like the next evolution of One Medical. So they have this unique experience where patients that come into their clinic don't actually interface with a doctor in person, but
Hmm.
there is a doctor there, but the doctor's on a screen and the person is in person, or the patient is in person. And the reason for that is that you need physical things inside of the doctor's office to do things like get your heart rate and get
Hmm.
an X-ray and get blood work, but the doctor being tied to the real estate actually makes the process a little bit more inefficient. And so you can basically see the same general practitioner anywhere you are, whether you're traveling or whether you're at home and going into a physical clinic. Telehealth versus in person, you can have that continuity of care because your doctor is always, kind of tethered to, they're I shouldn't say tethered, they're untethered from the
Right.
real estate itself. And so they've been growing like crazy. They actually sell into employers right now. So I think you can be like a direct to consumer customer of them, but they've been really thoughtful about growing and getting insurers on board and getting employers on board. That way, this can actually be built for like the everyday um, person and not just for like the coastal elite or the tech elite that want to pay like a really expensive, monthly fee just to have like a cool healthcare experience that's holistic. And I think because of the
Mm.
infrastructure that they're building, they'll actually be able to pull in multi-specialty care to this as well. So um, they can be kind of a central node for a lot of different types of care.
Okay, can you give me an example of that? Like I don't under like okay, first of all, Canadian, like we don't have insurance or anything like that. Our medical system is
Mm.
completely different. But like so what would that look like if if you had a resilient health physician? Like
Mhm.
what would that look like?
Basically, a lot of it is, similar to your normal experience where you have your insurance linked to your provider, and as long as you're insured, your insurance covers it, you're fine.
Yeah.
And they do work with most insurance providers at this point. So basically for me, it's like, okay, if I'm experiencing constant migraines,
Hmm.
I'm in town, I'm in San Francisco, and there's a resilient health clinic. There isn't yet, but if there
Hmm.
was, I could go into that cloud clinic and I would sit down in a room. There would be a registered nurse practitioner there
Mm.
who could help me get set up. There's somebody, it's not like I'm just walking into an empty space. There are people there to like help make sure that the appointment is a success. But
Hmm.
ultimately, I could sit down in the exam chair and screen in front of me turns on, the doctor's on the screen saying, "Hi, Amber, how are you
Mhm.
doing?" And I'm saying,
Mhm.
I'm having these migraines. And they're like, "Okay, well, let's check your vitals." So, like the nurse could actually like put, something in my ear or my nose,
Yeah.
and actually the doctor can see it on the screen, and I can actually look at
Oh.
it with them. So I can see how they're analyzing my health and like kind of taking it all in. Um, and then similarly, like say I was traveling and I was in Chicago for a work trip, and I'm like,
Mhm.
oh man, like I'm not near any cloud clinics,
Mhm.
so I can't physically go in. Just like I could on One Medical, I can go on the app and say, hey, I want to schedule a video call with my doctor. And I could pick the next time slot my doctor is available. And I could say, hey, you know what? Um, you know, last week's appointment was great, but I just got another migraine. What do I do this time?
Mhm.
And so I think the nice thing is that you're not meeting
Mm.
with a different doctor every single time you're calling in.
Yeah.
You
Yeah.
have the option to like stick with the same general practitioner and have some
Yeah.
continuity. So, yeah,
Yeah, I can see for certain health conditions it would be very beneficial, like somebody who's has heart with the
exactly.
and yeah, like do I fly home to see my doctor? What I do? This is something I shouldn't be ignoring.
Mhm.
Yeah. Hmm.
Yeah, it's interesting you mentioned that because the founder actually started this after his dad had undiagnosed like sleep apnea for years
Mm.
because he had gone to see different doctors with different symptoms, and it was all very fragmented, and it's like the evidence was there, it just wasn't all together. And then that ended up manifesting, I believe, in a heart attack that was really rough. And so as last few years, Donish, the CEO, was his primary caretaker, and he was spending like 5,000 minutes a year in waiting rooms, waiting for appointments all the time with his dad. And he was just like, something has to change here. Like, the doctor needs to be decoupled from the real estate, because he's a doctor himself as well. So he could see where like all the
Yeah.
inefficiencies were on the back end.
Mm.
And then he's also saying, man, if there was better continuity of care too, we could have caught this
Mm.
a lot earlier. So,
Continuity of care. Yeah, huge. Huge.
yeah.
Okay. So cool. So their growth is exciting.
Very, very exciting. Yes. Yeah. I don't know if I can share it
Yeah,
publicly
no,
on
it's
a
okay.
podcast, but it is, when we invested, they were at basically like zero revenue, because I like to get involved really early, especially if I find these sort of proven operators that I can trust because they've been through the trenches. And so we invested when they were at zero revenue. And the day that I was like signing the term sheet to invest in the round, they brought in their first enterprise contract. And since then, it's just been like nonstop growth. And it was a powerful lesson for me too, because that CEO, his super skill is like enterprise sales, and I never would have even known that. I knew he was great at fundraising because I had chatted with him in that context, but enterprise sales is extremely tough, and he had a doctor background, so I wouldn't have guessed that he'd be like so incredible at it. And
Mm.
but he was, and like it has just grown so well since then, and it's actually given me like examples of other things I should look for in future founders because it's gone so well. So.
Wonderful. Yeah, no. Maybe we'll shift a little bit here and talk about women doing these things. And like I interview men and women all doing great things in whatever industry that there is, and then balancing that a little bit with their personal lives. And but like I must say, in like having a conversation about angel investing or investing at all, it was so like foreign to me even a year ago. And to think that like I invested in your fund, which is like your fund is the first in like private investment I've ever done. So it's pretty cool. And then to even get these like have these deal flows coming through, right? Like and I, it is exciting, and it's I think this is why I want to have you today and have more women like you, because it's something that I don't think a lot of women feel like is in their you know um reach at all, or that they have to have been studying finance or an engineer like yourself. But no, I'll admit it. Like certain things that come through, you see it, and you're kind of like, "Oh, that's so cool." Like, for example, There was one that came through, like, not through the council community, but, another way for me, and, like, I had just done my bone mineral density test, like you need to after a certain age, and it wasn't what I had hoped, and then, I don't know, there was just some new innovation, like, kind of opportunity to invest in that had everything to do with bone mineral density, and I was like, oh my god, I became so interested right away because I'm just like, okay, this pertains to me and any woman post menopause, and like it's just those kind of things is sort of you get so excited, and I didn't think I could
Yeah.
even be a part of that world, and of course you can.
Yeah.
So,
Yeah, I see this a lot with brand new angel investors, and our community is all women. So like that's my data point.
mhm,
And a lot of people come into our community and are like, hey, I've always been curious about angel investing. I see people posting about it online. I see folks with, limited experience like investing in companies that end up doing really, really well. And the
mhm,
reality is like not every situation goes down like that. Like you have to build a portfolio because not all of them are going to be like the next Uber. But
right,
that's why you invest in, a large set of these, or you invest in funds that are investing in large sets of these, like you did.
yeah,
Um, but what I find is, it is one of those industries and spaces where people feel kind of closed out. It's like historically been an old boys club, and
mhm,
it does, it has the same like financial jargon as the rest of the finance industry does, and that kind of keeps people at bay where
mhm,
they're like, oh, I don't know what that means, so I'm just going to stay away from that. But actually, you can probably I've seen multiple people put together a list of just like key terms in angel investing. Once you understand those key like 25 terms, or even
mhm,
just have it as a reference you can look at, um,
mhm,
it gets a lot
mhm,
simpler. Like the
mhm,
actual math is very simple. You want to get in when a company is worth X, and you want
mhm,
to see that there are comparisons when similar companies have been worth Y, and you can use your expertise and your own math to try to like figure out what that could be worth someday. And
mhm,
your networks are powerful too. So like everybody has a network of people that are different experts in different things that you can lean on. And people have a lot more um, interesting perspective than you would think. So like at the Council Angels, we try to bring together people that have all different backgrounds and
mhm,
experiences, because then if we're all looking at a deal together, you might be looking at something,
yeah,
maybe it's like a platform for mental health,
yeah,
and you're looking at it from the psychotherapist's perspective, like,
mm,
well, I don't know how they're going to actually onboard psychotherapists into this because I don't really see
mm,
the incentive there.
yeah,
And then somebody else was thinking about it from like a vertical SaaS enterprise sales perspective. And they're like,
mhm,
I don't know how they're going to sell into like where they're trying to get. And another person has worked for Aetna, and they're like, well, what's their strategy to get insurance companies on board? Because I don't think,
yeah,
individual patients are going to want to pay for this. So you just get these interesting perspectives, and that's where like being part of communities goes a long way if you're just getting started angel investing. And ultimately,
mhm,
I think men have been investing like this in communities and talking about deals together forever. And
forever,
so, it's
mhm,
just about time that we do it too. And I think people really enjoy it. I know I personally enjoy being able to talk about business with my friends. So
yeah,
it's exciting.
yeah, it really is. Now, along the lines of, not every business that you might invest in is gonna necessarily, do well, like, there is this, like, saying that approximately 10% of all startups fail within the first year. And
Mhm.
so, like, what's your experience with that? Like, yeah.
Yeah, so it's a great question. And I think there's such a wide set of experiences, because some of these, like the data reports that come out on this, you'll see all different stats, but you also have to remember that is like everyone, in the world that is reporting their
Yeah.
data as a venture capitalist or an angel investor, and all different levels of experience. So, and then there are folks that are like, they're inside of Silicon Valley. They've seen like multiple companies just get, go from like seed stage to IPO, and just like rinse and repeat, and they've seen like what some of those similar factors are, and so they might have a totally different data set for groups of people like
Yeah.
that have actually seen what it takes. And
Mhm.
so I'm in this weird position where it's like I used to be an outsider, now I'm on the inside, and I'm pulling a lot
Mhm.
of people onto the inside with me, whether or not they're in Silicon Valley. We're kind of like all sharpening
Mhm.
our pencils and creating our craft together. um, So I don't get super bogged down by that stat, but and I've even heard worse stats. I've heard like 90% of startups will ultimately fail. And so you want to rely on the 10% to actually produce the returns that are going to buy back all the failures of the others and more.
Right.
And so I prepare for, there's like planning and then there's reality. So when I'm planning, I plan for worst case scenario. And that's why I want to invest in 30 companies with any fund I've done previously or my angel portfolio. I've always said I'm going to invest in 30 companies total with this over 3 years. So 10 per year. That means I'm going to get exposure to 3 different years because it could be totally different market cycles we're talking about during that time.
Right.
It also means I'm going to get to invest in 10 different companies that year. And even in that group of 10, there could be one huge winner.
Mm-hmm.
And then I have basically 3 shots on goal if you're thinking it's one in every 10 that's going to be that big one. Um, and then the reality is, there's going to be it's not like all go to zero and 3 of them go to the moon. It's like maybe 1 to 3 go to the moon. And then there's a bunch of, companies that maybe don't make it there, but they find another like soft exit route where you get liquidity. And then there's a few that do ultimately have to shut down. So I've been investing in the private markets for now almost 6 years, and my angel track record is now 6 years old. So those first 30 companies, I'm just now starting to see a few companies shut down. And I do think these are companies, I think it's happened to 3 companies out of that portfolio of 30. So it
Mm.
was like 10%, but it took them 6 years to be like, you know what, this is actually not working.
Yeah.
Personally, I think they probably could have realized that a little bit sooner because all 3 of these companies, I kind of saw the writing on the wall for a while.
Mm.
Um, but with our fund portfolio, we haven't seen any companies have to completely shut their doors yet. So we've had like 9 going on 10 companies raise follow-on funding and grow their revenue and do really well so far. We have a bunch that are kind of like on track and they're growing just as expected. And then we have 2 that have had like soft landing exits where it's like, they weren't growing as fast as they thought they would be able to with this business. And they decided strategically it's better to get acquired right now and get our
Mm.
our investors either cash or equity in a better company that is growing faster
Mm-hmm.
right now versus like continue to be a dead horse. So that's been the reality of my experience. I've never seen a startup in my portfolio fail within the first year. It usually takes a
Well,
few years for them trying and seeing what's working and what's not working,
mm.
to really like know that they've fully explored it and it is or isn't going to work. So yeah.
Yeah. Okay. So you're not the only funder in the company.
No.
No, no. So, but you do support these companies somehow
Mhm.
to your best ability. How do you support them?
So basically, first there's the capital, as you mentioned.
Yeah.
And then immediately after that, we really pull together our network. So I've kind of cherry picked 5 different advisors that are functional experts out of
Okay.
my own network. And these are like the people I would want sitting around me if I was launching a company myself.
Yeah.
And so I have one who's a design expert. She was first designer at Cruise. So I worked with her there. She's also been a designer at Facebook before it was Meta. She's now at Snap as a designer. Really, really great designer.
Hmm.
I also have Sonia, who used to work in marketing for me when I was at Atmos. She consults tons of startups on PR and marketing. She helped our own fund come out of stealth and get written up in
I'm
Forbes.
interviewing her tomorrow.
Oh, amazing. Yeah, she's awesome.
Okay.
And then we have Rohini Pandey, who led product at Square for many years, and now
Mm.
she's at Mercury as their head of product, I believe. Christine Boyden, who is like a CEO of
Hmm.
a massive PR agency. So that's just, and then Annabelle
Yeah.
Lippincott-Paxoy, who was like a head of people ops at Open Door from like tens to hundreds of employees. So those are like, that's like the SWAT team you want around you when you're at like a pre-seed company, but you cannot afford them yet. All you can afford is like 1 to 2 engineers, and maybe that's the same even at seed stage, like some engineers, some designers, but you cannot hire like the best leaders out there, and you can't even sometimes hire anybody in those functions for a while. So
Yeah.
our goal is like surround them with support of people who have done this at top companies and know what it looks like. And we think that's
Mm.
really critical between pre-seed and Series A, because Series A is when they start to get huge influxes of capital, sometimes over $10 million, to go and execute on their vision. And that's when they can really start like, making compelling offers to bring top talent into their companies. So
Mm.
that's been our strategy so far. And then we help them in various any way we can. It's like
Yeah,
if you're a founder in
exactly.
the portfolio, you contact me, you get a call in like 5 minutes. Like
Yeah,
they're our
yeah.
like number one priority. So
That's
yeah,
so wonderful, like for them to know that, yeah, they have this huge team of supporters. It's not just the capital, as you say.
yeah.
It's so much more. So this is like maybe a stupid question, but like, how do you pay yourself?
Very good question. So at first I didn't pay myself anything because when you launch a VC fund, basically you have to go out and raise it first. And in order to
Hmm.
raise a fund, you need to show that you're actually doing something that is worth investing in. So for the first 3 years, I angel invested to build up a track record while I was working at Cruise and a little bit of Atmos at the end. So it was like my side hobby. And then once I had that, and I wrote small checks in. So, we're talking 5K checks. So
Yeah.
this is like what I would have spent on grad school. Instead, I spent it on angel investing, and that has worked out well for me. So then I made the decision I'm going full time on this venture firm. And luckily, I had been working for 10 years and saving up. And so I was comfortable, taking a year and just investing in myself and saying, I'm going to spend this year fundraising for this fund and starting to invest out of it. But I didn't feel comfortable taking a paycheck from it until I knew that I'd hit a certain
Yeah.
fundraising target. And then at the very end, when I finally closed the fund, which takes forever as a first time fund, when I finally closed the fund, it was like, oh, like I actually can pay myself back for some of that and start paying myself a decent paycheck. It's still not anywhere near what I would have made in tech. I think my
Yeah.
salary is like a third of what I was getting paid before, but I'm doing work I really love. And
Yeah.
this is not a get rich quick business. It's a get rich very, very slow business, but it does
Mhm.
have, potential for massive returns. And so for me, it's worth, taking a salary that gets me by. I cover my burn with my mortgage and my childcare and my health care, but
Right.
I'm not, not making a ton of money outside of that.
Hmm.
And, I do well if my LPs do well. So I earn like, I think, so it's called carry, but ultimately it's like a profit share thing. So like if I invest $1 million and on behalf of myself and the LPs, and that becomes worth $10 million someday. The profit on that is $9 million, and I make 20% of that profit, and my LPs make 80% of that profit. So
Hmm.
I don't earn my 20% until my LPs have actually gotten their initial money back, and then we start actually profiting off of it. So um, that's where it's like over the long term, you can make a lot of
Y-
money working in venture, but in the short
Yeah.
term, you need just enough to get by. So yeah.
Wow. Okay, so I think this is a good spot to bring up trust. Like, trusting in yourself and then this
Mhm.
ability to trust, yeah, like the companies and the founders. And so like, would you say that you kind of always grew up quite confident, or how would you describe like your own growth, your own personal growth throughout the
Yeah.
last 5, 6 years?
Yeah, I mean, I wouldn't say that I've always been the most confident person in the world. I've definitely met people that are like 10 times more confident than I am. And but I do think like this is where it's helpful, like having an operating career before you go into VC or before you start angel investing, because you're like, oh, I know something about this. I have a
Mhm.
question to ask that maybe somebody else wouldn't have thought to ask.
Mhm.
And the more you put yourself out there and let yourself experience that, the more it becomes real to you. So at first you're like, oh, I have nothing to add. Why would a founder want to work with me? Or what do I know about angel investing? Then
Mhm.
you start doing it. It's like, oh, like these are leading to great conversations. I mean, really incredible people. And wow, these people are actually performing really well. Like I wasn't just crazy investing in that company. So for me, I've taken this like test and iterate approach. And so I felt if I had not done the angel investing portfolio first, I think I would have felt a lot more nervous asking other people for their money to invest in the
Mhm.
council fund. But because I was seeing some leading indicators from that first portfolio, it was like, you know what, I'm doing something right here, and it's actually worth putting more money to work, and it's worth like giving other people the opportunity to invest alongside me, and also being real with them that like this is still a high risk asset class, and
Mhm.
it shouldn't be the only thing you're investing in, and it does take a
Mhm.
long time to mature. But I think honesty up front and like having those candid
Yeah.
conversations leads to trust, because if you're like if you ever meet anyone that is telling you there's no risk and like you're going to make all this money really fast, it's probably not real. So,
Yeah.
yeah, for me, it's like honesty is the best policy. And then in terms of trusting entrepreneurs on the other side, where I have to be the one trusting them,
Mhm.
um, I think it takes a certain personality type to, like, be able to step back and let somebody lead. And I was a people manager for many years, and I think one of the best, if I or one of my team members were to describe me my strengths, I think it's like advocacy for others, and then
Mm,
like trust and
mm,
not being a micromanager.
mm,
So for me, it's about like agreeing with them up front, like what is your vision, and not projecting it onto them, letting them explain what their vision is to me, and seeing if that resonates with me.
mm,
Asking them what are your key KPIs, and like seeing even how open they are to like two-way conversation, how much they really want to work together versus just like do it on an island, but also how confident are they? Do they need me, or are they going to be successful either way? And I would prefer the latter.
mhm,
And yeah, so and then from there, it's like once you've agreed on that first level of trust, like this is the type of person I want to back, we're aligned on the things that matter, then it really is time to step back. Like I want to be helpful to them when they need it, and I want to show them what I can do for them. But ultimately, if they need to go heads down building for 3 months and they can't be talking to their investors all the time, I completely understand that because they're dealing with sales, they're dealing with team
mm,
management, they're dealing with
mhm,
their own fundraise stuff, their own back office. And I know how busy
mhm,
that can be. And so for me, I'm
mhm,
comfortable as long as they're communicating and sending investor updates,
mm,
and that we've agreed on what that looks like, then
right.
I'm comfortable that they can go lead, because that's why I picked them ultimately, is because I believe that they are the leader that can take this company forward. So, and I
Yeah,
think just understanding that people are human too. Like sometimes they have, sometimes they have moments where they make a mistake, or,
mhm.
something like that. And the more human I think they show they are from the start, the better. Because then I know we can have real candid conversations when they're having a problem that they could use help with.
Exactly. No, I think you explained that really well because sometimes silence can be the most difficult thing to
Hmm.
deal with, right? It's like, are you okay? Are you okay? Why? Yeah,
Yeah.
yeah, 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 yeah.
Yeah.
No, that's great. So okay, so I mean, it sounds exciting. It sounds super busy, but you also mentioned daycare, so that your
Yes.
mom.
Yeah.
Yeah. Okay. So how many kids?
I have one kid, one 2 year old.
Okay.
So yeah,
Okay. Oh
very
my
young.
God, two. Oh my. Wow.
Yes.
Okay.
She's adorable.
Yeah, I'm sure he is. So, okay, so how do you manage all of that? Wow, I didn't know you had a
Yeah.
two-year-old.
I mean, I think everybody manages it differently. For me and my husband, we basically do everything together. So, and we
Hmm,
just like split it up. Like both of us have crazy jobs, both of us have a 2 year old, both of us do housework. So it's not like one of us does one thing and the other one does the other thing. It's kind of like which, maybe that could be easier, but for us, it's like better for us to kind of split everything. So
yeah,
on a day-to-day basis, usually my husband will take her, like feed her a bottle in the morning, take her into daycare. She's there from like 8:30 to 5:30. And then I work from home like 4 days a week and then go to the office one day a week, usually. And either way, I try to be home in time to pick her up and like feed her right after
yeah.
school, or daycare, because my husband typically works downtown. It's a lot harder to get home at that
Mhm,
point. And
mhm,
so usually like we're getting our evening routine going as he's getting back. And that just works for us. It's like one of us has the morning, the other one has the evening. And then sometimes we swap if it's like, oh, this is going to be a crazy day, or I have an after work event. So can you get home early?
yeah, yeah,
And that just works really well. So I think
yeah,
that's been good. And it's, allowed me to really thrive.
yeah, no, that's great, like, I think you're so right, everybody has their own little method to the madness, and, what was I gonna ask you about that? Well, you know what, like, so, like, I think a lot of people feel you know, certain careers would lend like to certain sort of frame of minds or ways of thinking. I mean, so what you described so much so far is like it seems like you use a lot of strategy, a lot of logical thinking. Um, but women are portrayed to be less of that and more, emotional, nurturing, but like what I feel like the couples that really make it work well is to see, each other's strengths and weaknesses, right? And like to take the competition out of it. Like, I mean, someone like yourself, you could be going, well, what you think I'm going to just take the standard, like, motherly stay-at-home mom role or whatever. It's just there's a lot of mutual respect in terms of, I mean, that's required, right? Respect is huge.
Mhm.
Um, but like, yeah, what's your take on that in terms of how do you think you and like your partner are able to um, balance your own needs in terms of what you want to do with your careers and as a family, etc. Is there some sort of little, thing that you've created so far that seems to help you?
Oh man, we don't really have any like rituals that help us kind of like, stay on track with that kind of stuff. But I will say, like, for us, it's been the right decision that like both of us work, both of us take care of her because I think it does
Yeah.
build that mutual respect. Like I know what it's like to have a crazy job because I have a crazy job, so I'm not going to hassle him if he has to go on like a 3-day business trip. He's not
Right.
going to hassle me if I have to go on a 3-day business
Right.
trip. We
Right.
just know that like, okay, we both have stuff going on. We have to cover for each other.
Yeah.
And it's easier to relate like with the other person and what they're spending their day to day doing. And then both of us like really value our family time. It's like in the evenings and on the weekends, that's our family time. And we're like all together and we're trying to enjoy each other as much as possible.
Yeah.
And no one is like worn out, like, oh my God, I've been doing this all week. So I actually
Yeah.
need a break from it. It's like we're both like, oh my God, this is our time with Eva. Like let's focus on her and let's focus on each other. So it works
Yeah.
for us. I don't know that it would work for everyone because it can be overwhelming trying to figure out like, oh, okay, who's doing what because it's crazy all the time. But I'm pretty sure it's crazy all the time, no matter what
Yeah.
strategy you choose. So
Yeah,
you
yeah,
just figure it
no,
out.
right, no, so, like, I think, I think you just described it really well. It's sort of like we communicated what our needs are, and my need, is to continue this crazy job that I have. It feeds
Yeah.
my soul. It makes me happy. It makes me feel functional. That doesn't mean that I don't want to be a mom. I want to be a mom as well. And I love everything about being a mom. I just feel like sometimes women feel like they can't do both. And I feel, that's kind of sad. Like you can do both.
I agree.
Yeah,
Yeah.
and you can do both very well. It's
Yeah.
just communication is huge, um, as they say. But you know, but there are challenges. Like, I mean, even my husband and I, like, we're completely different, you know, um, ballpark than you in terms of like the ages of our children. All my children are adult, but like even he and I on the weekend, we were like, okay, how do we spend more time together? Like I find
Yeah.
that part can be tough.
Yeah.
Um, because especially, you know, like a 2-year-old, it is exhausting. It's like
Yeah.
they can play by themselves, but typically, they always want you around and you're tired from your day. I mean, you like your
Yeah.
work, but it is tiring. So then to find that time to spend together can be tough. Is there anything that you guys have, devised?
Yeah, that's a good question. So for a long time, we did not because our families live far away. So like my parents are in the
Oh.
Midwest, his are in New York, we're in California. So we didn't have like built-in babysitters or anything like that. But just this
Mhm.
year, we ended up basically meeting a babysitter that is doing a really great job with
Mm,
Eva. And so really anytime we get the chance, well, we don't have like a set date night, like on Tuesdays we go out or
no.
anything like that. But it's like if a friend invites us to do something, our default answer is yes, as long as our babysitter can do that night. And our babysitter tends to be really available. So
Mm,
that's been working really well for us, where it's just like if we have the chance, let's get out, spend time with friends, spend time with each other. And we recently went on vacation
mm,
in Italy for a little bit, and
mm.
um, we actually like every single night. So the first half of our trip was in Norway. It was all hiking, and she was with us
Oh,
24/7 on our backs. So we were like so tired by the time we got to Italy. And we just decided, you know what, this is the relaxation portion of the trip. We're hiring a babysitter every single night. And it can get expensive, but like it was when you look at it in the grand scheme of things, it's like
oh,
that is money so well spent because
so
we were
well
able to go
spent.
out to dinner and just enjoy and like not think about whether there's going to be somebody screaming next to us in 5 seconds,
Yeah,
and just like
yeah,
enjoy it and take our time. So that was
yeah.
totally worth it to do even for a few nights in a row when we had the chance. We're like, oh, our hotel can find us a babysitter. By all means, yes, we'll
Yeah.
take it. So
Awesome. Oh,
yeah,
that's great. Gee, I didn't even know hotels would even have that. Like,
I know we got
which,
lucky. So
wow.
yeah.
Um, yeah, like, okay, so what would you say um is the biggest life lesson that you've learned since your time in investing? Like if you sort of like had to think about it.
Wow, yeah. So there's a lot I've learned. I
Yeah.
think um I think a big one is there's just been this evolution. I don't know if it is a lesson learned, but there's this
Mm.
evolution you go through. And I imagine a lot of founders go through it, and it's almost like if they don't, maybe they're like overly confident. But
Yeah.
this is the first time I've ever raised money from other people to do something. And so I think for me, I felt a lot of gratitude at first. And then I started overworking because I was like, oh my gosh, like every
Mm,
single moment that I'm sleeping or that I'm not working on something, I'm
yeah.
not doing right by my LPs. And I'm like, these LPs have believed in me. Like, this means the world to me. I cannot, sleep until I complete this thing. And I did that for basically a whole year. And I think I burnt out because it was like, you're already wearing so many hats as an entrepreneur. And then on top of that, you're thinking about that the whole time you're sleeping. So I started losing sleep over it. My sleep,
Mm,
deteriorated quite a bit. And then finally, actually, I think I got to the point, and I think this is also natural for a lot of entrepreneurs, where it's like you work so hard at something and you start to see the results that your confidence starts building. And you're like, oh,
mhm.
yes, I'm still grateful to all of these people that have backed me and believed in me, but also like I'm delivering too. And you start feeling confidence in that. And it's like, then it feels like, oh, we're all in it together. Like, just as it was structured from the start, like we're all partners in this. I'm a general partner, they're limited partners. Um, they all get to be a part of this just like I do. And like it's way less, it feels way less like you're indebted to someone, and it feels more like it's a partnership. I think the longer you go in, because at first it's kind of like
Mm,
asymmetric. It's like they put all the money in and you still have to do all the work. Then it's like you start doing the work and it's like, okay, now it feels a little more even and we're moving together.
right.
And I've heard that, I think I went through that without fully realizing it. And then I've heard other entrepreneurs say that too, that like the first couple years were just so rough for them because of that feeling of like overwhelming gratitude and indebtedness to the people that have believed in you. So I think, and I never want to lose that. I never want to like not be thankful for people that believe in me, but also you can't take it to such an extreme that like you're not even a person anymore and your needs don't matter. So
Well,
yeah,
yeah. No, I mean, I can kind of relate because, even as a therapist, to ask people for money after
yeah,
they've been so vulnerable with you, and it's sometimes really hard to do, and always this feeling is, have I done enough? Did I make a
right.
difference? And so I can totally relate in that way. But no, I think that was really, really good, what you said because, the whole burnout. I'm curious, did you seek like did you ever I wanted to ask you this, did you ever have a coach, a mentor? Did you seek therapy through all of this like novelty that you went through and like doing what you did?
You know what? I never sought it out. I did participate in this program, Recast Accelerate, that gave us like an executive coach. We had like 6 sessions with them, and I did find that really helpful.
Mm,
Um, there's so many seasons in the work that I do where it's just like the needs change week to week. The
mm,
psychological thing is changing
mhm.
week to week. So that was definitely helpful. And yeah, but I've never really sought it out. Um, but yeah, and then I think it's like finding somebody you truly connect with is important
Yeah.
too, because it's such a different, different styles in terms of coaching. So there've
Mhm.
been a couple of people I've met over time where I'm like, oh, maybe that would be a cool coach to work with, but
Mhm.
I've never like fully clicked. So yeah,
Right, right. Yeah, like and so you noticed the burnout yourself. I just want like yeah,
yes,
you noticed it
oh
yourself.
yeah,
Okay.
oh yeah,
Okay.
I could feel it happening for sure.
Yeah.
Yeah,
Yeah. Kind of a scary place to be in a way, right? It's sort of like, "Oh
yeah,
my gosh." Yeah. So,
yeah, yeah,
okay. Well, is any well, okay, so like let's just end with maybe just telling us a little bit more about the council community, the angel
yeah,
investing community. Yeah. So, you mentioned
yeah.
it a bit in the
So
beginning, but like yeah, let's just
Yeah, basically, it's this community of angel investors. It's based on application. We basically open it up 2 to 4 times a year just to see if there's anybody else out there that would like to be a part of this community, that would be a value add to the community and to the founders in our network. And the way that it works is basically our members are, they're able to privately refer deals and founders that they know in their network. And then they're able to see deals on Slack that other angels
Mhm,
are sharing in the community or that I'm looking at for the fund and think could be a cool deal for them. Members are like upvoting deals together, discussing those deals together. The
mhm,
deals that are getting the most interest in Slack end up being invited to a live pitch meeting. So our angel
mhm,
investors get to join this Zoom meeting every single Tuesday, like at
mhm,
12 p.m. Pacific, and basically spend their lunch hour um,
mhm,
basically getting to know different startups and meeting like 2 to 3 startups back to back, and then getting
mhm,
to discuss those deals privately as an angel community. And that's
mhm,
really like the heart of the council, which is like seeing the different expertise that comes out in those discussions. And then from there, angels actually have the access to invest in those companies if they're interested. And sometimes we pull together our investments. Sometimes people invest one-on-one in
mhm,
those companies directly.
mhm,
But we try to design it in a way where we can get more women on cap tables. And then also for the founders, like bring more people onto the cap tables that could be helpful beyond a check. So we do look for people with some
mhm,
operating experience,
mhm,
whether that's in tech or in like a different industry, especially that intersects with our fund. So like,
mhm,
Luella, you're a
mhm,
psychotherapist. It's been awesome having like
mhm,
your opinion in there because we see a lot of healthcare deals. We see some mental health related
mhm,
deals.
mhm,
And so we like industry experts as well.
mhm,
Um, but yeah, we have applications open actually soon, and we
mhm,
typically onboard like 15 members in each cohort, get a
mm,
lot of applications, and try to figure out like which are going to be the best fits mutually.
mhm,
And then we go from there. But it's a really awesome community, and it is how I got my start too. So like I
yeah,
got involved with the Council Angels early on, became a co-leader of it, grew it, and then launched the fund out of it. And so it's like none of this would have ever happened without that community. And I also see other people that have come through the community and like met their partner and ended up launching a fund with them, or decided that they themselves want to become a founder and they feel really empowered to do it because they've seen so many pitches at that point. So it can
yeah,
lead to a lot of exciting things. Like even if you don't want to be in VC and you just want to be a better business leader,
yeah,
well, what better way than like seeing deals all the time and getting to work
mhm,
hand in hand with founders and CEOs. So it's a
mhm.
really neat community, and has a lot of value for the members. So
Yeah. Well, okay. Yeah. And anybody listening will have that in the show notes so you can reach out to me. And yeah, no, it just like hearing you speak right now, I'm just thinking, okay, I got to attend more because sometimes life is busy and I just know it's like anything else, right? If you don't exercise it, if you don't put yourself around it, like, at least on a weekly basis, I mean, to hone the skill, you got to use it. So,
yeah,
yeah, no, I'll be back in there more. Yeah.
yes.
Yeah.
Well, we love having your perspective.
Okay. Well, thanks so much, Amber. Yeah. And
Thank you so much for having me.
it
It was
was,
wonderful.
yeah, it was wonderful. It was a lot of fun. So I'll let you get on with your day, your busy day, and everyone else. We'll see you next week. Okay.
All right. Thank
Bye.
you, Luella.
Bye
Bye.
bye. Thanks for tuning in to this episode. Remember that you can watch the full episode on YouTube, where I plan to hang out the most. Your feedback and suggestions for future guests are incredibly valuable to me, so please don't hesitate to post a comment. You are an integral part of this journey.